I just wanted to quickly touch on the gaming and professional services stocks that are reporting in February. There's a list of all the companies with key reporting dates and so forth. I guess there are probably a couple that I'd rather or would like to focus on, particularly IPH, which is well held across the network, and Jumbo Interactive. So IPH, obviously the stocks had a bit of a rally into the result, reporting on the 14th of February. We're tracking their domestic patent filing numbers and anticipate that they'll probably see about 1% growth on the PCP there. They will have an additional 4-month contribution from the AJ Park business for the Australian operations. So we are expecting to see some good revenue growth, obviously, on the PCP from that. Underlying market remains sound. We expect to see, just moderate growth from the Australian business, 1 to 2%, as it has done over the last, 10, 15 years, excluding the blips caused by things like the raise the bar and so forth. So, look, it's a good underlying business in Australia. The real upside, I think, is the Asian business. At the AGM, the company said that things were tracking really well there. If that's still the case, given all the global machinations and uncertainty, there's probably upside to our Asian forecasts, both for this half and the full year. There's also, I guess, a bit of corporate activity in the space with both IPH and Zenith having a look at Quantum. At the moment, Quantum and Zenith have entered a merger implementation agreement. We still think there's scope for IPH to come back over the top and potentially offer a cash and scrip deal to Quantum shareholders. In our view, this would be pretty accretive for IPH because of their lazy balance sheet at the moment, but also the fact that they'll be able to take existing work that Quantum's sending up to Asia and move that on to Spruson and Ferguson businesses and capture the margin there as well. So while the stock's trading pretty close to our price target, we're still certainly happy to be there and certainly buyers on any weakness. It's trading on about 18 times PE for FY19 and offering a pretty attractive 4.3% dividend yield. Another one, I'll quickly go through to Jumbo Interactive. This stock has performed unbelievably well over the last couple of years. The good news is we don't see that signs of that slowing down anytime soon. So this stock is highly leveraged to the jackpot cycle. What we've seen following the rejigging of Powerball around April last year is that we've had two $100 million Powerball jackpots. We've also had a $100 million Oz Lottery jackpot in this financial year as well. There are a couple of factors at play that will encourage new customers to join, and obviously it enables Jumbo and Tabcorp, for that matter, to market to those customers on an ongoing basis. It also reduces the marketing expenses that Jumbo particularly pay, because a $100 million jackpot or a $50 million jackpot sells itself, so they don't need to get out there in the market and promote these products. So Jumbo did provide earnings guidance and jackpot guidance in early December. Again, they're notoriously conservative in the way that they forecast the jackpots going forward. They don't try and guess what jackpots may be. They use historic numbers, and I think what we're going to see with the new Powerball setup is that historic numbers will, as I said, prove conservative. So we've already seen 28 jackpots above the $15 million level so far this year. There were 21 in the first half, and Jumbo forecast 37 for the full year. So I certainly see upside to that. In fact, the second half started incredibly well with 3 jackpots at or above $50 million and 1 at 100, and Jumbo in their guidance only assumed 1 at 50. So certainly see upside to both their first half and full year numbers. Have a look at the report that we put out a few days ago, which sees us sitting ahead of those. The company also has the Powered by Jumbo product, which is effectively offering a one-stop lottery solution for customers. They recently signed up with the Mater Foundation for their charity lotteries. It's a high margin product. There's software as a service as they're promoting it. So it's plenty of scope and growth for that business. And that could be a real earnings driver for this company over the years ahead. So we have a $10.90 target. There's about 30% upside, I think, to our from the current price. and we expect to see future capital management as well, given the strong balance sheet and their propensity to pay out special dividends. So great story. Very happy to keep buying it, even up here. I think there's still plenty to go in the story as well. So they're two that I really wanted to touch on. We do have a pack and formal notes as well, looking at other companies that are in the space. And I guess one other company that's not reporting in February that I just wanted to touch on is Aristocrat Leisure. They have their AGM on the 21st of February. The stocks bounced back nicely following the sharp sell-off at the result. We think that they might provide guidance for particularly the digital division at the AGM. That's kind of where the market's concerns lie. Industry data that we've seen has shown strong growth from the social casino business, ahead of both our and consensus estimates. So still very, very happy to buy this business. It's a cracking story. They're investing for the future, which is what you need to do in the digital side of things. I got a target price over $30 and very happy to keep buying that one.